Again, do I find this interesting? Not at all. What we want to see in stock number one is, and this is something that I don't want to get on my watch list, it's a total delete. If you're not screening your stocks right, you're not likely to make a lot of money, and you're going to be trading in choppy stocks, in terrible stocks. You'll be making some money and giving it back to the market. So very quickly, let's explore how screening should be done, because it can be such a tiring exercise. I'm not talking scanners out here. I'm not talking where to pick up stocks from. But whatever stock that comes on your watch list, whatever stock that you are apprised of, and when you open up the chart, there are some things to look at and there are some things to absolutely avoid. This is what we're going to discuss today, and this will solve most of your problems, and you will never see charts the same way again. This is screening on Sunday, and let's dive right into it. We're not talking investment advice. We're not talking trades that you can take in the coming week. Please don't get it wrong. But if you perfect this art, you will never need another person to tell you what stocks to focus on. All right, we're going to go through 2-3 random stocks to really study what we're trying to do here. I'll introduce you to the layout we have. On the left, we have the weekly chart on a bar chart. So these are bar candles. And then on the right, we have the daily chart. And then we have the hollow candles. This is just a personal preference. But what is very important is that on the left, we have the weekly charts, and on the right, we have the daily chart, so that we can see both time frames. More of the scanning and the screening will be happening on the weekly charts, and let's get into it. Now let's go to graph. This is random. You don't need to do this exercise. Give me some interesting semiconductor stocks in India listed above 2000 crore market cap. Let's just see what names it gives us. Why am I going for semiconductor? Because this looks like an interesting industry. So we have BEL, market cap is insanely large. Moschip, RIIR. So let's just study these 4 names. And of course, these are very random names. So we have RIIR power here, and let's get into it, right? We're going to delete all drawings. And then let's see what's really happening. Number one, when we see the live charts, we've got to establish if it's worth trading or not. The way I see it, it's mostly below the 10 moving average on the weekly, which is the 50 on the daily. Mostly below, up and down, up and down. For that particular reason, I am not interested in this stock at all. Highly choppy. And this is something that I don't want to get on my watch list. It's a total delete. But for the purposes of this video, let's go into the past a bit and then see what's really happening. What we want to see in stock number one is a strong stage 2. Do you spend majority of your time above the 50 moving average on the daily? Yes, you do. Do you spend majority of the time above the 10 on the weekly? Yes, you do. 10 on the weekly is the same as 50 on the daily. Now, what you want to see is some follow-through moves on the weekly. This is step number one. So we'll just write this down. Guys, this is like pristine information. Number one, follow through moves on the weekly, right? So far, what we've seen in the past in this stock is we have 2 weeks of strong move and then up and down and up and down, and this sort of continues. But then here we see strong follow through moves and they're all closing higher. So of course, not a lot of entry. All closing higher will have relevance. Just try and measure this move. This is one leg of about 150%. And now that you have that, measure the consequent drop. This is about a 34% drop. Anything above 30 does not seem very comfortable, but because this is a tremendous 188% leg, the max we can handle is like a 35% drop. Anything more is certainly very deep. We have this breakout out here. If you don't want to trade this breakout because of the depth space, that's totally okay. You may avoid this. However, after the breakout, you see that the stock is closing around the same time, around the same price level. This is clearly constructive. And now you want to shift to your daily charts and see if there is an entry. And here's what you see, this particular action. You're going to mark your entries here. Above this, naturally, is going to be your entry. In this case, it's a circuit player, but it's going to work just perfectly fine in other stocks as well. Again, you have a follow-through move and straight up down. So there's nothing much you can do. Now let's look at other names where things will become more interesting. Let's look at Moschip and then Vidanta, right? None of these are buy and sell recommendations. We're trying to study stocks here. And if you agree with the analysis, let me know in the comments. If you disagree, let me know in the comments. But be very gentle about it. What do we see here? Number one, in this area, am I interested in the stock? Not at all, because what we see is basically a massive chop. Sometimes above the 10, sometimes below the 10, which means you're not strongly in a stage two. The stage two is established out here on the weekly basis. And what are we doing? This move is about a 69% move, enough to tell you that you're now in a stage two. And now we're seeing some incredibly tight closes. 1, 2, 3, and the volume's really dropping, right? So naturally, this becomes very interesting. This will be your resistance. And now you may shift to your daily charts, and this is what you see. So somewhere here, you're gonna have to plot your resistance, and an exit out of this area will be very important. Please wait for good closes and a proper breach above this area. It's already attempted it once, it didn't move, but then in this case, it was moving straight from the bottom, right? So now we're consolidating near the highs, becomes very interesting on the weekly, on the daily. Therefore, this is interesting. Now let's look at other stocks like Vidanta and see what it's up to. This is very randomly we're picking up names. By no means are these interesting names, right? I haven't even researched most of them before. Vedanta, certainly not. Again, do I find this interesting? Not at all. Why? Let's get into it. Firstly, we have a chart, right? That means there's no trend established. Now we're sustaining above the 50, but let's analyze this on the weekly charts. We have 3 higher closes and then 1 low close. So how much of a rally did we see? Barely 10% and then a pause. Then we have 2 weeks high, barely 9% and then a pause, which basically means this stock barely moves up and pauses, barely moves in and pauses. There's no momentum. If there's no momentum, you're not going to make any money. Therefore, plotting this resistance and buying this breakout doesn't make sense at all. It may work, from here the stock can perhaps do this, but I'm absolutely not interested in this because you're just displaying that you have zero momentum. Let's look at the history a bit, and this is where things become quite interesting. Now, on the weekly basis, this is quite a longer chart on Vedanta. We'll also go to this area. After this, we have this massive breakout. Now, interestingly, we have a follow-through move on the weekly basis. We're going to quickly measure this move, about a 53% move. And now we see some pausing action. Now, this is very constructive. You've seen a nice move, some pausing action. Go to the daily charts out here and you will see a constructive base. If you see a constructive base, naturally the same can be traded. This is the same area. Therefore, these areas become your resistance and this breakout can be traded. Did not last too long, but of course, this would have been a pretty decent trade. Your entry and exits are always on the daily time frame, but the weekly gives you a larger time frame picture. Let's look at the past history. Now, this is not a good trading stock at all. Because what are we doing? We go up and then go nowhere. We go up and then we come down and then we are up and down. Barely any moves, barely any momentum. Therefore, even though it's going up long term, this is not a pretty good stock for swing traders. Therefore, we're going to completely avoid it. Now, let's get to some auto names because we've done, I don't want to do HCL Tech. Tata XC is one we can do. Then we'll do one auto name and then we're going to end the video, and I hope the point would be driven home. Let's see this stock because we're analyzing on the weekly chart first. Majority of the time, you're below the 10 moving average. Therefore, you're not really in a stage two. For now, the stock is absolutely never going to come on my watch list. But let's look at the history. We see a nice sort of rally, which is very clear on hindsight, in hindsight. But again, we see a massive chop. Look at that, breaching your 10 and again. This is not a momentum at all. You will be chopped out. What we want is more linear moves. Now, this is something what we want. When the stock starts moving out of here, this move is quite a follow-through move. Every week we're closing higher, we're giving strong moves. You have an earnings report, and this is about 100% move. Beyond that, you want to see how much did you retrace? About 18%. Perfectly healthy, right? Perfectly healthy. Therefore, this becomes your entry out of this week or the highs as well. You move out 1 week and then you pause. This is going to give you opportunity to enter once again on the daily charts. Quickly, we're going to shift to the daily charts and we're basically around these zones. Perfect sense. So around this time, this is your second entry that you can take out of these zones, right? If you miss them. Now, what do we have? we have about a 46% move, and then we're going sideways once again. So it would be a good idea to mark these areas and trade breakouts from these areas, right? Yet again, we have a pretty decent 30% move, not the best, but I would still mark these strong closes. Why am I using these bar charts? We're just going to double click on them. I want to use high, low, close bars, which means I don't want to care about the open, and then deselect the thin bar. So we have a thicker bar and these. Now, again, on the weekly, this shows me that the price is closing at the same time again and again, and therefore this is going to provide me a further entry if I haven't entered as yet. Now you see this zone provides you with an entry. This zone, again, we're pausing. This is why the weekly bar charts are so important. This zone is a little consolidation once again, and all of these can be used to make entries. Naturally, the last one doesn't succeed a lot, but you had a couple of entries into this, and then the behavior just went trashy. So this way, you can use weekly charts on the left, daily on the right, bars and hollow candles. Lastly, how do you tell if there is a pause within a larger move? This is going to be very interesting. Now, you have this strong move of about 106%, and this is the crazy part. If the stock is closing in near the highs almost every week, that means the daily is not going to give you any entry. But here we see a sort of a retracement. We're closing a little below the highs. We're closing a little below the highs. These areas, you can find entries on the daily. We're just going to go here and see what was happening around this time. Yeah, you see the stock was inching higher and then pausing for a day or two, then inching higher and pausing here. So these entries could have been made to spot some daily entries. Therefore, let me just summarize it. And then I think this is going to make a lot of sense to you. Weekly on left, daily on right. Strong follow through on weekly. Beautiful. Now, in this follow through, say the stock closes higher every week. Any week where the stock closes weak, this could be a retracement / pullback on daily. Further, any week stock closes negative, this could be a basing action on the daily. So of course, this becomes very constructive, and this way your screening will become absolutely high quality. Finally, let's look at Cupid for a moment, right? So we're seeing a lot of follow through action out here. We see tremendous follow through. Almost every week the stock is closing higher. I'll just quickly measure this move. About a 65% move seems very healthy to me. This is about a 61% move, and then it sort of bases up. I'll quickly check the depth. 24, it's totally fine. And here we're closing around the same areas and we have a breakout. So on the daily, we'll have a very neat entry. There's nothing to worry about, right? This is a very neat entry. Now, what are we doing? We're inching higher. This is a pause on the daily, as you can see. And now we're closing at the same week every single week with a dry up in volume here. So naturally, this week becomes very constructive. And this is a beautiful entry. Could have stopped you out, but you could have re-entered. This is another pause. So I'm just going to mark the pauses. This is so constructive and no one ever teaches you these pauses properly. Back in the day, of course, strong follow through, a proper pause. A strong follow through almost every other week. This is 1 week where it retraces. This is a nice pause. This is something you can spot on the daily as well. So if I go here, this one pause is right here and this pause is right here. So you'll be able to mark your entries and exits very nicely. Use both charts. Let's make some good money in times to come. I'm going to be uploading videos for a while. You're going to be here for a while. So we're just going to keep seeing how we perform. And this is how things are going to go. And of course, if you enjoyed this, make sure you check out my website. Make sure you check out my Instagram, follow me there, and also make sure you subscribe. Leave your thoughts. It's wonderful reading them, and I'll see you around. Thank you for all the support.